What's happening, everybody? This is a special report. That's right. The Fed, the Federal Reserve Chairman. So, Jerome Powell today came out and gave a talk. Basically, what I want to do in this video is just break down what it is, why it's important, and how I'm particularly thinking about this. It's a sunny day here, folks. The glare is staring in my face. And just before we start, how many of you out there are playing Wordle? Wordle! How many are? Come on, put it in the comments. All right, so let's get it. So the Federal Reserve, some people say that the chairman of the, or woman, it could be, but the chairman of the Federal Reserve, Jerome Powell, may be one of the most, if not the most powerful man in the world. Now, I know that sounds maybe like a big statement, but why? Well, the Federal Reserve sets monetary policy in the United States, most powerful, wealthiest nation on the face of the earth. And so what this means is they have the ability to impact the money supply, right? And they can do that by various means and measures. But when you increase the money supply, it does a few things. One, the supply of dollars gets larger, and that usually leads to, again, supply and demand, greater supply of dollars, chasing maybe the same amount of goods. That could lead to inflation. It could lead, which is essentially another way of putting it, prices going up. And so in an environment that we've been in this environment, it's called quantitative easing, where they're printing dollars, right? They're printing, and they're adding money to the money supply. Again, this is in conjunction with the Treasury, but I'm more concerned about the Federal Reserve here. So the Federal Reserve, through this quantitative easing, putting more, essentially more and more money into the system in terms of cash. And we've been living under this for a while, and what that does is, you know, it's like an artificial, if you will, stimulation to an economy. And it usually can't last forever. Usually, right, you have to kind of have some sanity and kind of balance out. Unfortunately, when this we all know what has happened. I don't know if I can say the word without YouTube getting at me, but you know, this thing, right? This thing going around the world has led to unprecedented times. And so what's happened is not just the Federal Reserve, but central banks and the like all across the globe have had very loose policies. And so, I mean, just last year, I think we added like another 25% of our overall money supply into the system just in like 1 year, which is remarkable. But it's good if you hold what I'm going to call, you know, risk assets or risk on assets, like, you know, stocks, or in this case, maybe cryptocurrencies, very speculative. But the problem can be, it kind of works like a balloon, right? When you're pumping all these dollars into the system, all these, you know, assets that take on risk, they can rise and rise and rise and rise in price. And we've seen this not only with crypto, we've seen this with, you know, the housing market, we've seen it with you know, the equity market. But I think we kind of all knew that this day was coming. And so today, right, so the Fed meets, you know, every so often in something called the Federal Open Market Committee, FOMC. And you know, there's various different Fed chairs around the country, and they kind of all have their own little projection, you know, silently, you know, what they think. But eventually there's got to be a coordinated effort, and I think everybody knows that some tightening will probably be happening relatively soon. And So here's what it's looking like. Now today they say, okay, unchanged, but get ready for a 0.25% change. Now that seems like a small amount, and I think it's a very small amount, but it hasn't happened yet. But they're signaling, right? They're signaling to the market so the market can get prepared. But whether this happens, say in March of this year, which is just, a month or so away, and then continues for maybe another year or more, is yet to be seen. But we all know that inflation is getting out of hand, and we all knew that just all these factors together, that this time is coming. So that's what's going on. And here's what I am looking at in the crypto markets. And again, this ain't financial advice, you got to do your own research, but crypto is a very speculative asset class. It is definitely a risk on asset class. And so unless there's a total decoupling, meaning that, crypto just does its own thing, regardless of the macro picture, which most likely, I guess, in my opinion, I don't, as much as I'd like to see that happen, I don't know if we're quite there yet. Now, I don't know how long, or, whether or not a 0.25, rate increase is going to have much of an effect right away. But I'm thinking that over the next 1 to 2 years, these tightening policies will come to fruition, and most likely, will have an effect on equity markets, crypto markets, etc. I mean, we'll have to kind of, take it, step by step, month by month. Actions obviously by the Fed are going to speak a lot louder than, words. They've been talking, for a long time, blah, 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 blah. But, where's the proof in the pudding? So that's where we're at. And, I have never seen this much money injected into a financial system in such a short period of time. So it doesn't surprise me that we see inflation. And if you're on the receiving end of that, right, if you own assets that are appreciating in value, or if maybe you're, on the other end of it, the other spectrum, that you're on the receiving end from like government assistance or welfare. But there's a large swath, I don't know, is that a word? Swath of people in the middle that, maybe aren't participating, but they're definitely getting affected, right? Because they're getting affected because of their net worth or their value is not rising along with this, but they're having their expenses definitely increase. When they go and they get their necessities, they go to the gas station, they go to the grocery stores, and the prices are increased, and there's so it requires difficult choices. So that's, I don't know in terms of like, what could be more important in terms of long-term projections. This is certainly one of those things. If you want to kind of dive into a little bit deeper, even beyond this, I would suggest check out like Ray Dalio. Now, Ray Dalio, if you're not familiar, he's one of the most successful hedge fund managers on the planet, Bridgewater Associates. He has taken an approach to the economy where, he's obviously, he knows, that the macro, the large picture, and the environment that you're in is where the long-term trends are. But within those long-term trends, there's short-term trends, and how to play accordingly. So anyways, I'm curious to hear your all thoughts. Does this change your outlook, especially like, where do you look to still find growth in these potentially upcoming times? And leave it at that. So that is the special report, the Federal Reserve. And I hope this was helpful. Let me know. With that being said, peace.